But earlier today, biotech company Celgene reported earnings of 60 cents a share for the latest quarter and forecast better than expected earnings for the year. Now, the stock, investors very happy. They gained almost 5% on the news, then retreated just a little bit. Joining us right now with more on the outlook for the company, which makes blood cancer drugs, is CEO Bob Hugin. Bob, great to have you here with us.
Thank you, Carol, and thank you, Matt, for having me.
Let me ask you about Revlimid. I'm going to jump right in because that's your top seller, a big chunk of your revenues. But, you guys are, I think, put out a lawsuit in terms of defending it against, patent protection.
Yes.
How worried are you about generic competition anytime soon for this one?
We feel very good about our intellectual property estate. We've built it over 15 years, and so we will very vigorously defend it. We've got composition of matter patents, polymorph patents, use patents. We have a very strong estate, and we'll vigorously defend it. We're very confident of our position.
So easily years before we see any kind of generic.
We believe our patents will hold till 2027 on the issued patents. So we feel good about it. We're in litigation. We can't get into the specifics, but we're confident about the investment we've made, and we've made the right investment. We feel very good about this quality of our intellectual property.
You're still a strong growth company, though. We were just talking during the break. What have you got in the pipeline as far as something to fill this in when you do go out of patent on it?
Well, I have to tell you, Matt, one thing about Celgene, we have had a sustained investment in R&D for more than the last decade. We've been at the top of the industry in terms of the percentage of revenues that we reinvest into R&D. And today, we're in the very fortunate position that investment is beginning to realize benefits for us and our shareholders. We have 25 phase 3 or pivotal trials that are going to be underway this year that really position us for sustained long-term growth. So we've invested in the future. We're only beginning to realize the benefits of that significant sustained investment.
You also made an acquisition just a couple weeks ago. I noticed you had $3.5 billion in cash on the books as at the end of September. How much did you spend on Abraxis, and what do you get for that?
Abraxis is a very strategic acquisition. We closed it, it'll be 2 weeks tomorrow that we closed the deal, a little over $3 billion. It really expands us into solid tumor oncology, which is just a natural evolution from the hematology space where we've become a market leader globally in. So strategically, it's a great fit. It brings a product, Abraxane, that's approved for metastatic breast cancer, but is being studied in a range of indications in other solid tumors, including pancreatic, non-small cell lung cancer, bladder, ovarian, melanoma. So if any of those indications hit, it's not only going to be a great strategic acquisition, but it'll be one that'll have great financial results for us.
I want to go back to what you were talking about with Matt about, drug development. You sound obviously very exciting. Is there another Revlimid in your future? I mean, last year it was 64% of your sales. Do you see among those 25 drugs that are in phase 3, Bob, that there's another one out there for you?
Yeah, I mean, we think we've got a number of very, very exciting compounds. We've got a phase 3 compound in multiple myeloma coming behind it called pomalidomide that has shown very promising results. We have a drug in psoriatic arthritis and psoriasis, an oral drug that is just started phase 3 trials in the last quarter that seems to have a very good efficacy profile, but also a very good safety profile. That could be a big undiscovered asset, or really not fully valued asset for Celgene.
On the scale of Revlimid, forgive me, because I'm not familiar with the potential markets for all of these, but on the scale of Revlimid, or?
If it's successful, obviously phase 3 is a risky business to be in, but we're studying it in 3,500 patients in 450 sites around the world. The size of those patient populations in psoriatic arthritis and psoriasis that are not adequately served today would be a very, very attractive market for us if the drug delivers the kind of results that we saw in controlled phase 2 trials already.
What is injectable suspension?
Well, you must be talking about Vidase, our second leading drug, which is a very, very important drug in the treatment of myelodysplastic syndrome, another blood cancer. It's the only drug in that space, a hypomethylator space, that really does provide a survival advantage to MDS and AML patients. So it's an injectable drug that has offered a nearly doubling of 2-year survival for these very sick patients in high-risk MDS.
It's not fair to only have 5 minutes with a biotech guy.
No, it's not, because just explain it all.
Maybe a couple weeks, actually, in the lab.
Listen, you and I were talking in the break about QE2 because we're spending so much time. You don't really care about that. 20 seconds here. What does keep you up at night? And just quickly, if you could.
This is a risky business. It's a tough business. When you're talking about starting in research in the lab, maybe 1 out of 10,000 compounds will ever even make it into human testing. And then human testing, you've got tremendous risk. So it's an incredibly exciting business. And so we're focused on making a difference in the lives of patients. So it's all the risks are worthwhile, because when you have success, you really are making a meaningful difference to a lot of people. And we can only be successful if we do that.
All right, got it. Bob, we're going to leave it there. Thank you so much.
Thank you very much for having me.
Bob Hugin, he's the CEO of Celgene.